Okay, welcome back to my class. Today we are going to discuss a very important topic, and that is the central bank. Central bank, you are knowing, every country of the world having the central bank. In our country also, we have the central bank. In India, Reserve Bank of India operates as central bank, whereas in China, there is People's Bank of China. In England, there is the Bank of England. In America, there is Federal Reserve System. These all are the central bank. So question arises, what is the meaning of central bank? What are the function of central bank? We'll discuss the meaning and function of the central bank. Let us see central bank. Central bank is an apex in financial institution which controls and regulate the monetary and financial system of a country. It means the monetary system and financial system of a country is being controlled, is being regulated by the central bank. So let us see, I have already written one definition of the central bank. A central bank is an apex institution of a country. Apex means top institution, top financial institution of a country that controls and regulates the monetary and financial system of the country. So I told you, Reserve Bank of India, it is operating as a central bank in our country. Reserve Bank of India was established on 1st April 1935, and since 1935 it is working as a central bank. Question arises, what are the function of the Reserve Bank of India, or what are the function of the Central Bank of India? The first and most important function of the Reserve Bank of India is that it is a bank of issue. Bank of issue means currency authority. Currency authority. Currency authority means the currency, the paper currencies are printed by, are issued by the Reserve Bank of India. But all the currencies, even the coins, 1 rupee notes, and all the paper notes are being controlled and regulated and circulated by the Reserve Bank of India. In our country, in India, let us say 1 rupee notes and coins, 1 rupee notes and coin, it is issued, it is printed by Ministry of Finance and Government of India. So Ministry of Finance, Government of India used to print 1 rupee note and used to issue all sort of currencies. And paper currency notes are issued by Reserve Bank of India. So paper currency notes of any denomination, whether 5 rupees note or 10 rupees note, 20 rupees note, 50 rupees note, 100 rupees note, 200 rupees note, 500 or 2000 rupee notes, all the notes are being printed by the Reserve Bank of India. It means all the currencies issued by the Reserve Bank of India, they are the monetary liability. Monetary liability means whenever the Reserve Bank is issuing the currency, they are obliging the value of asset equivalent to the value of assets in the form of gold coins, in the form of gold bullions, in the form of foreign currency reserve, in the form of government securities, against the government securities, against the foreign currency, against the gold reserve. The currencies are being issued by the Reserve Bank of our country. So the currency issued by the Reserve Bank of India is having the uniformity all over the countries. So the notes which are in circulation here in Delhi or in Kerala or in Northeast, it is of the same quality, it is of the same color, same size. So there is the uniformity maintained into the note issue. So there is the uniformity into and there is the monopoly power. There is only one power that lies into the hand of the Reserve Bank. no other commercial bank, no other financial institution, no other international institutions are authorized to print the notes. So in our country, in India, only Reserve Bank. These notes and currencies, they are the legal tender money. It means it is printed on the basis of the order of the government. It means it is legally authorized to accept as a value of transaction. It means no one can refuse. Legal tender money is of two types. One is unlimited, another one is limited. Suppose 1 rupee note and coins, one can refuse after a certain maximum limit. But that other paper notes, nobody can refuse to accept the payments in terms of paper currency. That is why the paper notes are known as unlimited legal tender money. So the second most important function is the banker to the government or the government bank. Government bank. So just like we the people, we the public used to open the account, whether current account or saving account or time deposit accounts or recurring deposit accounts, we open our account where? Into the commercial bank. But governments, all sort of government, central government, state government, union territories, they used to open their accounts where? Into the Reserve Bank of India. So Reserve Bank of India used to maintain the current accounts of the state government, central government and union territories. As a banker, let us see, Reserve Bank of India is working as a banker. As a banker, what it is working carries all banking business of the government. It means all business, all the banking businesses of the government are being done by the Reserve Bank and maintain current accounts. It means Reserve Bank of India maintain the current account. Receipts and payments, all sort of receipts, all sort of payments, government receipts are done through the Reserve Bank of India and provide loans and advances. Loans and advances. Loans are being provided, advances are being given to the governments, to the state government, to the central government against certain securities. Short-term loans are given against the treasury bills. Long-term loans are also given for the developmental works. So this Reserve Bank is having the power to issue the loans and advances to the governments, to the state government. As an advisor, let us see this government bank. Reserve Bank is a government bank and it time to time it advises to government regarding financial and monetary matters. Regarding monetary matters, regarding the financial matters, the different suggestions are given, different advices are being given by the Reserve Bank to the central government, to the state government as an agent. It means this banker to the government bank, the Reserve Bank is working as an agent. It means it is the agent of the government. As an agent, it collects the taxes, the income tax, some other type of taxes are being collected by the Reserve Bank. All sort of taxes, you are knowing that suppose the GST is being paid or the income tax are paid or corporate taxes are paid, all sort of taxes are being collected by whom? By the Reserve Bank of India. So and other payments, all sort of payments, that payments are also being done by the Reserve Bank on the behalf of the government. So this is the second important function. Let us see what is the third important function. The third important function of the Reserve Bank of India or the central bank of a country is the banker's bank. Banker's bank. Let us see all the banks, all the commercial banks, all the insurance companies, all the investment companies, whatsoever the financial institutions are there, they have to maintain their current account into the Reserve Bank of India. All commercial banks, all the financial institutions, all insurance companies, all investment companies, all industrial development companies, all the other companies which operates into the countries, and they had to maintain their accounts into the Reserve Bank of India. And let us see, as the banker to the bank, the central bank function in three capacities. So central bank is working into three capacities. Let us see what are the three capacities. The first one is the custodian of cash reserve. Cash reserve. It means cash reserve means this reserve bank is the custodian of cash reserve. This means all the commercial banks and all the financial institutions, they have to keep certain percentage of their deposits into the form of cash with the reserve bank. And that is why we call that reserve bank is the custodian of cash reserve, in order to provide the safety, securities of the depositors into the commercial bank. Let us see, certain minimum percentage of the deposits are being accepted, being collected by the reserve bank. So that is also one of the custodian of cash reserve. It means it keep the custody of the cash reserve of the commercial banks. And lender of the last resort. Last resort, sometimes you are knowing there is the financial insecurities. Sometimes there is a financial problems into the commercial banks, and that time they are not in a position to run their businesses. So that time, in the last moment, they used to go to the reserve bank and requested the loan to the from the reserve bank, and reserve bank used to sanction the loan against certain securities. So against certain collaterals, against the securities, the reserve bank used to sanction the loans to the commercial bank, the lender of the last resort. So in the last moment, let us see, in terms of the financial crisis, in case or at the time of financial crisis, commercial bank withdraw the loans, withdraw the credit from the reserve bank. Clearing houses. Let us see, I told you, all the commercial banks, they have to maintain, they have to keep their current account into the reserve bank. And sometimes some dispute arising in between the commercial banks, one bank with another bank, the dispute is there, dispute of the claims of the payments and receipts. So the claims of payments and receipts are settled by the reserve bank by bringing change into the debit and credits of the commercial banks. So that Reserve Bank of India can bring changes into the debit and credits of the bank in order to settle the disputes, settle the problems in between the commercial banks. So this bankers bank, I told you, commercial bank, as this central bank is the bankers bank. It means the bankers banks means reserve bank is the bank of all the banks. So I think this is also clear. And the controller of money supply and credit. Controller, credit, you are knowing, credit is being created by the commercial bank. Commercial banks are creating the credit by sanctioning the loans. Whenever the deposits come to the commercial bank used to keep certain required cash reserve, and rest of the money they used to lend into the market in terms of loans. But let us see, the loans are to be regulated. The credit is to be regulated. Otherwise, there may be the problem into the economy. There may be the inflation, or sometimes there may be the deflation also. So inflation and deflation is to be checked by the Reserve Bank. So here, controller of money supply, circulation of money. Money supply means circulation of money. The total stock of the circulation of money which are into the economy at a time, that is to be regulated. And credit means the loan is to be regulated by the Reserve Bank. And Reserve Bank, let us see what they are doing. This using the monetary instruments. using the monetary instrument. Monetary instruments are related to the instrument which are related to the regulation of money and money supply. That is called the monetary policy. So the policy of the government related to the money and money supply is known as monetary policy. And monetary policy, there are different monetary policy instruments. That instruments are being used by the Reserve Bank of India in order to control the money supply. Let us see what are the monetary policy instruments. The first and most important is repo rate. Repo rate. Let us see. Repo rate is the short time lending rate. Short time. Short time. You are knowing the commercial banks, they used to borrow the loan from the Central Reserve Bank. So when the rate at which commercial bank borrow the money from the Reserve Bank for the short period of time, that is called the repo rate. Repo rate means the rate at which central bank lend the money to the commercial bank for short period of time. Another one is, let us see, reverse repo rate. Reverse repo rate is also there. Sometimes commercial, there is central bank, means we can say Reserve Bank also used to borrow from commercial bank. Here what we have seen, repo rate, we have seen the commercial banks are borrowing from the central bank or the Reserve Bank for a short period of time, but reverse repo rate. Under the reverse repo rate, what happened? The Reserve Bank of India borrowing from the commercial banks for short period of time. That is reverse repo rate. So repo rate and reverse repo rate, these rates are sometimes increase, sometimes decrease in order to regulate the circulation of money, in order to regulate the credit into the economy. If suppose that Reserve Bank wants that money is to be increased, the circulation of money is to be increased, then what will they will do? The repo rate will be decreased. When the repo rate will decrease, when the credit will be available to the commercial bank at low rate of interest, then what will happen? Then availability of credit with the commercial bank will increase and supply of money and the credit will increase into the economy. But commercial, if the Reserve Bank thinks, no, the circulation of money is already very high and because of large circulation of money, there is widespread inflation into the country, then that time what they will do? They will increase the repo rate. When the repo rate will increase, then commercial banks will borrow less amount. The less amount means less credit creation. So these instruments and bank rate also. Another one is bank rate policy. Bank rate is discount rate policy. Means the bank rate is also just like the repo rate. But here what happened? It is the borrowings taking place for long period of time. Commercial, when the commercial bank borrow the credit from the Reserve Bank for long period of time, the rate at which the commercial bank borrow from the Reserve Bank, that rate is known as bank rate. The bank rate is the rate at which commercial banks borrow from the Reserve Bank for long period of time. So this is the bank rate. I think bank rate, so government also influences the bank rate. The Reserve Bank of India influences the bank rate. Sometimes bank rate is increased, sometimes bank rate is increased in order to either expand the credit or sometimes to contract the credit, sometimes to increase the money supply, to decrease the money supply. Another one is the open market operation. Open market operation. It means open market operation is related with the sale and purchase of the government securities into the open market. So government securities are purchased and sold into the open market. You take the treasury bills, you take the government securities, different government securities. So you take the one security, we can say bond, government bonds, Suppose national savings certificate, one simple example I can give you, national savings certificate, so many bonds are there. So government bonds, government securities are purchased and sold by the Reserve Bank of India. And main purpose of buy and sale of the government securities into the economy is either to increase or to decrease the circulation of money, or in order to increase or decrease the money supply into the economy. Another one is the legal reserve requirements. Legal reserve requirement, let us see, it is the banking law that all the commercial banks functioning into the economy, they have to keep certain legal reserve ratio. Legal reserve ratio, legal reserve requirement is of two types. One is cash reserve ratio, another one is a statutory liquidity ratio. Cash reserve ratio and SLR, CRR and SLR. These are the two ratios, these are the two reserves are to be maintained by all the commercial banks. Some cash are to be maintained with the Reserve Bank, some cash are to be maintained with themselves. So when, let us see, the commercial banks used to keep the cash reserve of their deposits, such as the current deposit and time deposits, with the Reserve Bank, that is known as cash reserve ratio. So cash reserve ratio is the ratio of the cash which is to be kept by the Reserve Bank. It means when the Reserve Bank used to keep certain percentage of the deposits, that is known as cash reserve ratio. Another one is a statutory liquidity ratio. A statutory liquidity ratio means the banks, they have to keep certain percentage of their liquid assets, the certain percentage of their deposits in the form of the cash, It means they have to keep certain percentage of their deposit in the form of cash so that they can meet all the requirements of the depositors. Otherwise, what will happen? When the depositor will come to borrow the money, then suddenly there may be the shortage of money into the bank. So the Reserve Bank has made the policy that a minimum reserve is to be maintained always in the form of cash of their deposits against their deposits. So this is the statutory liquidity ratio. This CRR and SLR, this is the ratio. It is also influenced by the Reserve Bank in order to control or in order to regulate the money and money supply in our country. Another one is the margin requirements. This is another instrument. This is the margin requirement. Margin requirement is the difference between the amount of loan and the value of securities, the value of collateral. You are knowing, whenever we are going to the bank to get the loan, then bank do not sanction the loan equal to the security, value of securities. What happened? They used to sanction the loan less than the value of securities. So suppose this margin requirement is the difference between the value of security and the value of loan sanction to the customers. So this margin requirement is also influenced. Sometimes it is increased, sometimes it is decreased. It is decreased, it is increased. Suppose the margin requirement is 40%, then 60% only the loan can be sanctioned. Equivalent to the 60% of the value of security loan can be sanctioned. But the margin requirement reduces to 20%. It means 80% of the loan, of the value of the security can be sanctioned. It means margin requirement is also one of the instruments through which the money and credit can be increased or can be decreased. So let us see, these are the different important functions of the central bank. I think I told in our country we have Reserve Bank of India. Reserve Bank is operating in our country as a central bank. And we have seen, let us see, we have seen in the first time, we have seen the definition of the central bank, we have seen the function of central bank, we have seen the various functions, 4 important functions we have seen. The first one is the bankers, a bank of the issue or the currency authority. Then Reserve Bank is the banker to the government or the government bank, and bankers bank. Central Reserve Bank is the bankers bank, and then controller of money supply and credit. So I think this concept is clear to all of you. Okay, thank you.